Guys, I kind of wanted just to do a short video, bring this to light. Maybe some of you guys would be interested. I know this is a Yu-Gi-Oh page, but I think this is quite reflective of the overall market, and it can cross-pollinate basically to Yu-Gi-Oh and other TCG markets. So what I wanted to go over here is basically the effects of inflation and the devastating effect actually of inflation on the middle class and the lower class. All right, so when I give numbers here, it's going to be straight from the charts, but also if I give my own personal numbers, it is not my intention to flex or boast uh, anything. I'm just trying to give you guys a real life example of somebody who has no horse in the game. You understand? Like I'm not here to, you know, drive the market up or down. To me it doesn't really matter. Um but I just wanted to kind of give you guys some perspective, and hopefully if you learn something from this, comment down below and just let me know you'd like to see more of stuff like this. This is a little bit more macro. There's no like specific thing here, but I okay, let me just proceed and you guys can tell me stick to Yu-Gi-Oh, shut the hell up, or if you'd like to see a little bit more of this. So what I wanted to focus on here is certain asset classes, and kind of give you guys a perspective about what happened in this area right here in February to March to April. Okay. Um, People kind of don't look at this number right here, this time area right here with enough significance because uh, uh, the media didn't really they didn't really stress it enough too much. I'm not sure if they knew about what was going to happen. I'm not sure honestly, but in when we look at Bitcoin, we could see it's not really that significant, like this drop right here. However, if we go to like the Dow Jones, all right, and we go into right around the same area, which is February, right? And there's that significant drop right there, and then there's the rise again. If we go into S&P 500, we see the same thing, significant drop and then rise again, right? Now this is an index fund. This is the the TikTokers way of getting rich. Basically just invest into S&P 500. It always goes up and it always pays you to own it. So yeah, basically this is what I kind of wanted to focus on. Here's gold. You can see again right here, this is January, and there's that drop right there again, and then rise again into infinity and beyond. All right. So, okay. Now, if you guys remember, what does this represent right here? This is the announcement of the coronavirus. Okay. Now, if we look at the max, we can see that 2008 there was that huge crash. I know it looks small on the graph, but guys, trust me, when you see like a big candle like this, a small a red candle like this, that's massive. And then we see that rise over and over again. We see that dip in 2018. I don't want to go into that. If you would like me to discuss this, I can. Um, I was actively monitoring, and I had knowledge of the market during that time. So I can speak about this. I unfortunately cannot speak about 2008 that much, as I wasn't really uh, woken up. I was just a child back then, but I was aware for this, so I can speak about this. But this right here, this is huge. All right, this is like sharper than this, to be honest. But anyway, we could see here that there's that like a very massive drop. Okay, and this was right around coronavirus. All right, and it was dropping hard over the 2 weeks. So this was February 14th when it hit the peak. and then it bottomed out March 20th. So in around a month, it dropped this steep, and then it started rising again. Okay, so we want to know what happened during this area. So we said that here they announced coronavirus, right? Well, coronavirus was being announced like throughout this time right here, like the prepping, but it was like a pandemic and there was a lot of urgency this around this point right here. That's when you see the drop. Um, so what is it that kept bringing this thing up, right? Like if we go like in the past 1 year, we could see that it's just constantly gone up. All right, it went up from that's April 15th, that's 2,700, to now it's like almost no, not really double. It's like 1.5, 1.8, 1.7, something like that. Um, so we can see that it's constantly gone up. All right. Now, I'm going to give you guys my perspective on this and why I think that it is, right? And I'm going to tell you, obviously, that you guys know, if you know me at all, this had to do with this right here. Okay. The $2 trillion coronavirus stimulus bill is signed into law. In this area right here, what actually happened was central banks were allowed to purchase assets to keep the prices up. Okay. And this is actually something that is against the law. They're actually getting sued by, uh, I wouldn't say a good friend of mine, somebody that I know, George Gammon. He just initiated a lawsuit over uh, the March central bank actions during March. Um, Basically, they signed $2 trillion. We obviously know that by 2021 it became 5 trillion. Okay, now if you guys want perspective on what trillion is, okay, uh, $1 trillion is $1 trillion can buy you every single item on the shelf in Europe. Okay, like all of Europe, every single item on the shelves, let's say you go to buy them, that's how much $1 trillion is. Okay, so imagine five of that. Okay, so this right here, and let me just show you the proof. This is March 27th. We can go back here. We see here, when did it end? March 20th. Literally a week. Okay, a week, and you see, look at that. Look, look at the rise right here. March 27th. It's literally to the day. Okay, to the day. Soon as they announced this, um, I would say most people who understand sound money, they went right back into investing into these asset classes. Okay, now we okay. I gave you guys my perspective, right? I showed you guys my perspective about this right here, this damage. You can also see it in Bitcoin. Now, Bitcoin is a little bit more volatile. So a 30% drop is something that's like normal. uh, it's not really, it's not like that crazy in BTC. Now it's kind of stabilizing at the 60,000 mark. But actually, I wouldn't even say stabilizing. I would say it's more like around the 50,000 mark. This is a little bit more recent information. Uh, yeah, March. This is when October. So yeah, March 2021. It kept rising. I mean, this is kind of like I would call this like basically it's filling its shoes. Um, but anyway, regardless of that, let's just move on. What I'm trying to communicate to you guys here is this: when you have a massive crash like this and then a rise like this, um, you have something called a wealth transfer. Okay. Now, what does this mean? This means that anybody in the middle, lower, upper class, okay, who was not holding assets, okay, has basically lost his ability to be able to um, purchase assets. Okay, he lost that. Okay, um, why? All right. So when we say that $2 trillion were signed into effect, and now the money trickles down. Okay, now this is what I kind of wanted to communicate to you guys. Oops, this was me testing out the program. Okay, so when you have $2 trillion, it starts right here. This is the government slash central bank. Okay, and it does not trickle like this, and it is received by corporations here. Let's just say C, and then it's citizens. Shit, that's another C. Let's just say SCI. Okay, citizens, and SB. Damn, I gotta get a mouse. Shit. Sorry, guys. So it does not trickle down like this. What actually happens is, if you guys don't know this, what usually happens is this. Okay, let's just say, first of all, let me touch on this aspect right here. So we have calculator right here. There is 330 million people. Nope, 330 million people in America. Okay, and they got checks of, I believe, $2,000 or $1,200. Let's just say 1,000 just to be shit. 3,000,000. Okay, they got checks of $1,000. I think it's per 2 weeks. Let me check real quick. Okay. Okay. So let's just say that. Okay. Let's just go with $2,000 a month. Okay. So you have $2,000, and then you have, let's just say, 12 months, and we have 5 trillion printed. So $2,000, 24. Basically, you have 24. Okay, so we have 33 million people, and they got $24,000 in stimulus over the past year. Okay, now when we look at this, that's 1, 2, 3. That's $792 billion. Okay, that is not even 1 trillion. You understand? This is the point that I'm trying to communicate to you guys. That is not even, so the citizens got this much. Okay, now we know that they printed 5 times this. Okay, 5 times, because 1 trillion is basically one more here, and then these are all zeros. Okay, they printed a little more than 5 times this amount. Okay, so the citizens, they got less than 20% of all the inflation that went out into the world. You understand? Less than 20%. All right, now corporations, they got the most of it. Okay, and I'm going to explain to you how. Okay, so like I said, the central bank, when they print the money, it does not go like this at the same time. What actually happens is corporations get it, okay, and then they spend it, okay, into the economy. What happens, what this means is they're buying assets, they're buying things so that, like, for example, like Elon Musk, right? He spent so much money from his corporation buying Bitcoin, right? that's Elon Musk skewing the price of Bitcoin through money that was not available to the citizens yet. You understand? This went to the corporations first, then it went to small businesses, okay? And then it went to the citizens through stimulus check. You understand? So it was not sent at the same time. And this is what I mean by, if these guys have the money first, okay? Let's just say Bitcoin is $10,000, okay? They buy it at $10,000 and it becomes, let's just say $20,000, okay? Now, if this guy wants to buy, all right, he has to buy at this price because they already purchased. You understand? That means this guy's, let's just say $2,000, okay? This guy's $2,000, all right, is worth less because he can buy less Bitcoin. You understand? Let's just say they received the same amount. Obviously, they didn't, but let's just say this guy received $2,000 as well. The corporations, they received $2,000, okay? Their $2,000 bought them 0.25%, 0.2% of one Bitcoin. You understand? While after the money trickled down to the citizen, this person can now only purchase 0.1% of the Bitcoin because the price of Bitcoin has already gone up. You understand? So the price of Bitcoin has already gone up. This person got hosed and now he has to buy at the higher price, which means that his $2,000 can purchase him less Bitcoin than this person. You understand? So when they issue this money here, okay, when people are dying to get this 2 trillion, okay, these stimmy checks, all right, what you are doing is you are screwing yourself over because when you demand for this, okay, to come into play, this person is going to get the money first and you're going to get fucked, all right? He's going to be able to buy cheaper than you will be able to buy, okay? That's just case number one. That's just saying that he's even getting the same amount as you are. Because I promise you, like I showed you, right? We only get as Americans, let's just say as Americans, we get 800 billion, right? That's out of what's it called? That's out of sorry, 800 billion. That's out of 5 trillion, which is less than 20%. You understand? The rest of it is going here. It's not going anywhere else. And these guys, let's just not kid ourselves. These guys are getting fucked even more, but because these guys are actually hiring these guys, but these are the real winners. You understand? They're the ones that win in this case. You understand? So, what I'm trying to explain to you guys here is that this is the one factor of why inflation is so detrimental to the middle class and the lower class. So let's just say this is the middle class and this is the lower class, which basically these guys work jobs, these guys have small businesses, and these guys are employing these guys. These guys are employing these guys. So the middle class and the lower class, okay, these guys are getting screwed because they have no control of when the money comes in. I promise you, by the time these guys got the money, these guys had already gotten theirs and already spent it. The market was already touched. You understand? The market was already skewed against these guys. Now, when you're buying on the high. You understand? And this is why usually once inflation starts, the lower class end up getting the shaft. You understand? And like, let's not kid ourselves. These guys know this, right? These guys right here, they understand this fully. Okay, they understand this 100%. Okay, not even a doubt about it in my mind. All right. But the problem is that these guys don't know. They only know that, oh, I'm gonna get $2,000 from daddy government, but they don't understand that They're basically getting, what was it? Like, let's just say we spent $2,000 here. The price of Bitcoin, let's just say we're getting half of what these guys are getting, if not less than that, right? We said 20%. I don't want to do the math exactly, but you get the point. You understand? You get the point here of why this is happening. Okay. Now, that's one aspect. Okay. Let's just say that I am here. Okay. This is me, Omar. Okay. I own assets. Okay. So because I own assets before this thing happened. Okay. So I'm going to explain to you guys in around this area. I don't remember exactly. I I believe it was like in May or June. Okay, I decided to go all in on Bitcoin. Okay, I believe I bought like 100K for like 10 coins. Okay, so um let's just pull this note tab up. Sorry guys. I don't know how to make a new. Okay, so I purchased 100K of Bitcoin. Okay, and it was around 10 coins. That's why I wanted to buy. Basically, it was around 10 coins. I waited until it hit around $10,000, and I put 100 grand into it. Okay, so what I want to explain to you guys here is the wealth transfer aspect. Okay, so we already went through one aspect here, which is basically they get to purchase first. So when you go and buy Bitcoin at 20K, right? These guys, you're making them richer. You understand? You're making the coin now worth more. You're doubling, you're working their money even more than what you're doing. Okay? Your investment is making them richer because they were able to purchase first. Okay, so I was a little bit ahead of the boat, and I was a small business, and I was able to purchase 10 coins for 100K. Okay, and I did this before the trillions went out. Okay, now I want to explain to you guys what happened here. All right, for me, I was around in 20, like January 2020. I had around, like, I'm just gonna be frank with you guys. I had around like 400K in assets. Okay, I had like let's say LOB box. I bought that at, I think, like six K. Okay, I bought that at $6,000. And I purchased actually six of them. So let's just say I dropped 36K. Meta Raiders, MRD. I purchased like 2K, and I have around eight of them, so 16K. Basically, if you add up all my assets, okay, including Bitcoin, I would have 400 to 500K. Okay, now $2 trillion, okay, is being now is pumped into the economy. Okay, what happened was my 500K now, okay, through zero production. Okay, I didn't produce anything, I didn't make anything, I literally did nothing. Okay, here I did nothing, honestly. I literally just held the assets. My net worth jumped from 500K to the multi-millions. You understand? Literally just by holding these assets. You understand? Like my Bitcoin, I mean, what is it right now? Bitcoin is at 63K. You understand? Like literally just Bitcoin alone, I have I I have more than my whole net worth of this. You understand? I have 630K of just Bitcoin. You understand? So because I was holding assets, right? I shot up like crazy, like not even through my own effort. Like I didn't earn this. You understand? This is literally just from me holding assets. I shot up from 500K net worth to around 250. No, around I would say like $2 million. Okay, $2.5 million. Let's just say that. Okay? Like, imagine that. Okay, now do you think this is something that naturally happens? Do you think that this is like this shoot up just by me holding some assets? I'm able to do this? And this and you know it's not the truth, because if you compare me to another $2.5 million guy, okay, I don't have the same cash flow that he has. I don't have that. That's the key here, guys. Like a 2.5 million guy has around like around I would say honestly I would say around 100K uh, passive income coming in around per year. Like just easy from like just his stock market, he has around 100K. Okay, I don't have that. You understand? I don't have that passive income. All I have is assets. So I should not be valued at 2.5 mil, because this is a fake evaluation. It's not real. You understand? This is not a real evaluation. My real evaluation would be 500K plus, give or minus, inflation, another 2%, 3%. I would say 5%, to be honest. I think they're cooking the books. But I would say my evaluation should be, by right now, 2021, I would say like 650K. You understand? 650. That's what I should be. Okay. However, I shot up to this much literally by doing nothing. You understand? So what happened here is, now I own assets. I'm able to pay off all my debt, everything I ever needed to pay off. You understand? And these guys who basically did not hold the assets, they're getting shafted again in their own way. You understand? These guys now, they they can't buy a single Bitcoin, whether they if they work the whole year. They can't buy a single Bitcoin, while I can hold it, and now it's worth 63K, like I showed you guys, right? It's worth 63K, and I didn't work that. You understand? Like I didn't work for me to go from this to this organically. You understand? This is a skewed chart. Okay, this is massive inflation happening, guys. You understand? Now you guys might be asking me, okay, I get it, Omar. Why is it that Dow Jones shot up this much while Bitcoin went went like absolutely parabolic? You understand? Like, why is this different growth than this? Okay, why is it that Bitcoin is growing at a different rate than a Dow Jones, right? If you're saying that inflation affects all around, and it does, okay, why is it that this one is kind of like linear while this one is like almost straight up? Okay, and this is my explanation why. I believe, honestly, I believe that people are truly realizing that the dollar is not sound money anymore. Okay. This is what I realized when they did this. Okay. And I'm going to be frank with you guys. When this happened here, okay, when they announced coronavirus, I actually sold off a lot of my assets. Okay. I sold them literally around here. So at the time, I'll give you an example. First edition base Charizard was around a $5,000 to $6,000 card. Okay, I sold it for 6,500 here, and then it crashed all the way to $3,000, and then now you could see it's like what, like 35K. Okay, I actually sold around 100K of assets in this area, because I truly thought that this is the big correction. This is going to be the big correction. And it did. I mean, I was like I literally called. I was like, dude, sell your stocks. This is it. I did not expect this to happen, okay? I did not expect this at all. Honestly, like This is absolutely mind-blowing. You understand? This is not something natural, and our future grandkids are going to have to pay for this through literally slavery. You understand? So, this right here, okay? This was the crash that was due to happen. And this is why I sold around 100K. Now, obviously, I don't liquidate everything because, again, I it's only probabilities. I only work with probabilities. I don't work with certainties. You understand? So I liquidated 20% of my position into cash, right? And it crashed, and I was happy. And then they literally issued this, and the same day you saw this, guys, March 27th, New York Times, March 27th, you saw a big ass boom. And I promise you, this thing right here, you see this little jump right here from March 20th to March 27th? That was the people in the know getting notice that, hey, look, they're going to issue this. Buy what you can right now. Okay. And that's when you started seeing the March 27th meteoric rise. All right. So, yeah, hopefully I've kind of explained this in a way that kind of makes sense. Excuse these draw excuse these drawings. I might get like a pen pad and do something like this. Um, but if you guys, if this is something that you're interested in, or if you guys are learning through this, so yeah, honestly, I think this is very important to understand. Um, the market that we have right now, everywhere, like I showed you guys, Bitcoin, Dow Jones, S&P 500, gold is crushing right now for different reasons. If you want me to go into that, I can go into that. But um, we can see here that all of these asset classes are kind of suffering hard. You understand? They're suffering hard, and suffering not as in by going down, as in suffering, as in like there is something called the stock market crashing upwards. You understand? Let me show you guys, for example, Venezuela stock market. uh Look at this chart. Look at this chart. Shit, what the hell's wrong with it? Holy shit. See this thing right there? This is I'm pretty sure they reset here. They reset the currency. That's probably why. But you see this? Look at this Venezuelan stock market, all right? Venezuela is right now one of the poorest countries in the world. You understand? Like it is absolutely bust broke because because of the trillions that they printed. Let me show you guys. Actually, let me just do this on part two. Okay, let me answer the phone. All right, take care, guys.